JPMorgan Chase, ticker symbol JPM, reported earnings today before the bell, and the stock was down about 0.74%. So nothing too crazy. You could see the type of volatility we had in the name today. And we're going to talk about JPMorgan, their earnings, and what it means for America as a whole, the consumer, as well as corporate spending. Guys, but before we dive in, if you could please go ahead, like and subscribe. It really, really helps me out. Let's dive in, and a quick overview of their earnings. Very good earnings. You could see this is probably the 11th or 12th beat in a row, beating on both the top line and the bottom line right here. JP Morgan reporting earnings of $45.68 billion, EPS of nearly $5, just under $5, beating the earnings estimates by a wide margin, continuing the trend, revenue growing about 2.6% over the last trailing 12 months, earnings per share growing about 12%, and fairly reasonable valuations when you look at it. A price to sale of 4.5 times, maybe a bit pricey in that regard, and a PE of 15. But let's dive into some of the highlights. This is just some things I pulled out from their earnings report. Now, you can see a revenue of $44.9 billion. That's what we just looked at. Now, expenses of $23 billion. So, they had an overhead ratio of 53%. Credit losses of $2.8 billion. Net charge-offs of $2.4 billion. Average loans was up 5% year over year, up 3% quarter over quarter, and average deposits were up 6% year over year. So this is for the firm-wide metrics. So looking at the consumer side, that's CCB right here, average deposits were down 1% year over year, but client investment assets were up 14% year over year. Average loans were only up 1%, flat quarter over quarter, and card services, or essentially, charge-offs, were 3.4%. That's really, really good. In fact, this was down significantly from the first quarter as well. So charge-offs, a real barometer for the consumer right there. So 3.4% in charge-offs. Look at card sale volumes, which are up 7% year over year, and active mobile customers up 8% year over year. And essentially, this is painting a healthy and steady outlook of the consumer. Solid spend, like no great appetite for borrowing, but no real sign of stress as well. You can see that in the consumer investment banking, their fees were up 7%, 12% up quarter over quarter. Market revenue was up 15% year over year, and then in the asset wealth management business, they had assets under management of $4.3 trillion, which was up 18% year over year, and average loans were up 7%. But guys, this was actually a very, very solid report. There was a couple of other things right here. Capital distributions. JP Morgan kept the dividend of $1.40 per share. And if you actually trail that over the last 12 months, that's a 20% increase in their dividend. You can also see that they are buying back a ton of stocks. That is thanks to Trump's agenda, deregulation. So they bought back $7.1 billion worth of stock this quarter. And so essentially all this company is doing is generating a ton of cash and giving it back to shareholders, and also reinvesting in itself as well. But yeah, there's just nothing really to hate about this earnings report. Maybe the valuation was looking a little bit frothy, but we beat expectations. And even though if you look at it year over year, we did actually see net income fall from 18.1 billion to 14.9 billion. The market largely did expect this because of some weird accounting metrics here in the second quarter. But return on equity continues to be 18%. Return on tangible common equity at 21%. Very, very solid stuff from JP Morgan Chase. It's nothing that you can really fault here from the bank. We touched over this already. Consumer and community banking, is up 23% year over year in terms of net income. Very low credit losses. Expenses kept largely in line. Very much similar with the asset wealth management as well as the consumer banking segment here for JP Morgan. But when we actually look at what to expect in terms of guidance, Jamie Dimon said they're looking at net interest income of about $95 billion. That would represent about 7% year over year growth. I think if the business continues to grow the asset wealth side of their business, as well as build some operating leverage, you could see earnings upward of 10% in that quarter. Very, very solid stuff. And they're looking at a net charge-off rate of 3.6%. So again, nothing crazy here. It's just business as usual for JP Morgan Chase. So where does that actually leave us with valuation? So banks are really weird to value. You sort of have to value them via an excess return model. So we have our inputs right here, our stable EPS, book value, our discount rate, and our perpetual growth rate. We then input them and calculate our risk-free rate, equity risk premium, our unlevered beta, our relevered beta, our levered beta, and then our discount rate and our cost of equity. These are the results right here. And then when we put it all together, right, using our excess return model, we get a result of $369. So this is essentially the value of the equity or the fair value for JPMorgan right now. The stock currently trades 22% under its fair value at about $286. So is JPMorgan a buy? 100% it is a buy. It may look expensive in terms of a PE ratio relative to other banks, but its scale, its unit economics, and its economies of scale allow it to have that premium valuation, as well as probably being the best run bank in America. So with JPMorgan, if we do see continued weakness in the market right here at this $270 area, right here at this $260 area, that would be a great buying opportunity because we used it as resistance at one point right here. We saw a little bit of consolidation before making our next move higher. So let's assume with JPMorgan, we do get a pullback here. It'll be about a 4 or 5% pullback. We find support at this level, and then we could rip to the upside. Either way, if you are looking at a longer term hold, maybe 5 years plus, this is also just a great place to go ahead and buy JPMorgan. That's an all-time high for JPMorgan. And you can see the path of least resistance is higher. We're literally just making higher highs, higher lows, new all-time highs. And even when the trend was broken, we went ahead and hit a new all-time high right here for JPMorgan. This is a very, very solid trend. And I do expect this to continue, especially as we get continued deregulation and an acceleration of earnings, more deal making, more mergers and acquisitions, more IPOs, more of this data center build out. JPMorgan is going to benefit on the financial side of that. And if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.